Good afternoon. Today we will discuss the question of whether you should run your business as a sole trader or a partnership or through a limited company. This decision can have a significant impact on your business profitability and success. If you're the only owner and you do not have any partners, you can choose between a sole trader or a limited company. In case you have one or more partners, you can choose between a partnership or a limited company. A partnership could also be a limited liability partnership, an LLP. That allows you to take the benefits of all the non-tax advantages and disadvantages of a limited company. But for tax purposes, it's considered as a regular partnership. In case you're starting your business, you may think a limited company is the best option for you, in which case you can choose between buying a ready-made company or setting up a new one. You will need to file accounts with Companies House from a non-tax perspective. As long as you're the director of the business, you would not be held personally liable for the business debt because the company has limited liability. Sole traders and partners are personally responsible for the business debts. Running your business as a limited company has several advantages and disadvantages. The advantages include tax benefits. There can be several types of tax benefits depending on the type of business. In some cases, businesses can deduct expenses such as salaries, benefits, and bonuses. Furthermore, some companies can also benefit from special tax breaks or credits. Also, tax rates paid by a company are less than individual tax rates. Limited liabilities is another example. One of the main benefits of running a business through a limited company is the limited liability protections. This means that the business debts are the business debts and they're not personally liable for this. As a limited company, it's also easier to access funding. Companies can raise capital easier than sole traders or partnerships, as investors are more likely to invest in companies that have formal structure and limited protection. It is also possible to avoid national insurance and minimize the effects of paying taxes with an incorporated business such as a limited company. On the other hand, the disadvantages would include costs. Setting up a company and maintenance of a company can be very expensive. To make sure that you follow rules and regulations, you will need to hire professionals such as lawyers and accountants, which will create additional high costs. Also, company fees can be costly. It is also more complex to run a company. Companies require to follow more regulation and requirements than sole traders. This makes the process more complex. Double taxation is another disadvantage. There are cases when the company and its owner are subject to double tax. Lack of control. Limited control by the owner in cases when they have company shareholders who have a say in the major business decisions. And finally, there is no guarantee that the actual favorable tax regime will always be like that. Laws and regulations are always changing, and this may affect your company. In conclusion, it is very important to check all the pros and cons before making any decision. Running a successful business requires dedication, time, hard work, and a clear business plan. We hope this has been helpful. We kindly advise you to always seek advice from professional accountants and lawyers.